What's up, everybody? Welcome to another live edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, I am scrambling right now to try and get this thing popping off because, oh man, I literally just hung up a conference call like just now, so that I could talk to you guys here live. So I want to apologize if it sounds like I'm scrambling and clicking things and getting stuff up, because I am scrambling, clicking things and trying to get stuff up right away. So just bear with me for a hot second. Thank you guys so much for coming out here. Sound on question. I got sound on. Sound? Yeah, I got sound. You always make me nervous, Trevor. Sound's on. Everything looks good here. Yeah, we're good. Okay, so let's go ahead and dig in. We're talking about Nordstrom, ticker JWN. Funny ticker, right? You know, when you see it, you're like, what the heck? So Nordstrom is down big today, and part of the reason is because of what we saw with Macy's this morning. So let's look at Macy's and what's happening with them. Let's do it here. Come on, Dave. Yes, I need some force here because it's been a rough week for your boy right now. Macy's, look at Macy's just getting killed again today. And it was funny because I was heading into this earnings season and I'm like, man, you know, maybe now we're finally going to get some of these retailers that turn around. I don't know about that, man, because Macy's came out and was a major disappointment. Same store sales disappointed, revenue, EPS, everything. Just not too good. Yes, Snap got killed yesterday too, so that was a thing. Pretty much, I mean, just a lot of carnage, right? Lots and lots of carnage yesterday. Very frustrating on the Snap. I have to talk about this right now, right? These guys are something else, man. You know, it's like I was giving them the benefit of the doubt heading into it, and I don't want to make this like an anatomy of Dave's Snap stupidity today. But we're here, so we might as well talk about it because it's very cathartic for me to talk about anyway. So Snap comes out, you know, just not good. And on a conference call, the 26-year-old snot-nosed guy running the thing starts giggling when somebody asked him about if they're worried about Facebook and everything that's happening, right? Not a good look for the kid. And that's part of the reason why this is getting crushed. The other thing is these shares, I don't know if you guys know this, but are not really voting class shares. So him and his cronies, you know, run, it's like 89% of the voting rights that they got. I mean, you know, and then so their subscriber growth, their daily active users weren't where we wanted them to be. We wanted like 170, 169 million. They came in at what, 166. But this could be another one of those plays, like I was telling you guys about, where they come in, they beat up the stock, and then maybe you can peck at it and buy like a Friday call out of the money. I know, right? Friday call out of the money, or maybe sell out of the money puts here right now and make back a little bit of that frustrating downside move that we saw. So there's that. So Snap, after that guy said that, you know, it's like, buddy, hope your horse wins. And I don't think I will be looking to be long Snapchat. And you guys remember the whole analysis thing, what we were going for. It was basically, I thought it was all going to be about daily active users. And since they had this huge advertisement essentially with the IPO and leading up to it, I thought that they would get a huge jump in users. They did not get it. And this is what happened. And then now with the management giggling, we're totally turned off to it. So this is what this guy gets. He definitely gets the street hates him. Everybody hates him. Hope your horse wins, buddy. Enjoy, right? So, yes, I'm very salty about Snap in case you guys haven't noticed. All right. So, JW Nordstrom. All right. Now, Macy's, though. I want to make Macy's a major center point of this. Now, this is canary in the coal mine territory, and this is really throwing us off and putting a monkey wrench into things. Now, who said that this was easy? It's definitely not easy. Nordstrom now down 7% after Macy's earnings. So without even looking at a stitch of analysis here, what we've got to do is decide if this is an overblown move to the downside, if this makes sense, as this is the canary in the coal mine. And this is also going to discount anything that you could have got, right? So let's say that we were going to come in here and be bearish on Nordstrom, right, with the stock over here at $50, and all of a sudden we were going to go, and put together some sort of put spread against this. Now we got a $3.50 detriment to any put spread we may have already been looking at putting on, right? This really changes the way that we look at this, mixes up the whole entire strategy here. Sears, I rant about Sears all the time, okay? Eddie Lampert is the CEO of Sears, okay, guys? All right, we're going to do this. This is going to be a nice little live look in here, Dave's kind of rant, okay? So I'm going to rant here a little bit. We're just going to do the Wikipedia on Eddie Lampert, okay? Okay. And we're going to look at the career here. Starts in 84 at Goldman Sachs. Then he goes to ESL Investments, right? Typically, here we go, holds investments, right? Makes $1 billion on a Wall Street Financial Manager, right? Okay. Bazillionaire. And then now, in January 2013, he goes, you know what? I'm going to be the CEO of Sears. And he's been the CEO of Sears. Okay. So, who's running Sears? Is it a guy with retail experience who's turned around multiple retailers? No. It's a money guy. It's a money guy who knows how to cut companies up in bite-sized pieces and eat them. That's what it is. So everybody's here all surprised that there's not this huge turnaround in Sears. Eddie Lampert should have told you that there's no turnaround in Sears, okay? He was never here to turn this thing around. Sears, he wants to make into a REIT and then slice it up into 100,000 different pieces and peel off as much shareholder value as they can and make the most money. They're eviscerating Sears, and it's a slow, painful process, and they will continue to eviscerate Sears, okay? Anyway, there's my Sears rant. You guys always get the Sears rants out of me. But still, this is all relevant. So then we have this terrible report out of Macy's. Now there's two very different sort of chasms in and if you notice, I made it a cat, like they're all going swirling down this death spiral of retail. And the ones that are swirling down there are, well, pretty much everybody. So you got the big department stores, Macy's, and then you've got the discount brands, right? So TJ Maxx, these guys, right? So this is like the not all the way the most priciest thing, right? So these are like the knockoff off of retail, I guess, so to speak. There's a word for it, but I had too much coffee right now, and I'm bouncing off the walls about the Sears thing, and I can't even think of a good word for it. But anyway, so here we're looking at TJ Maxx. Stores like TJ Maxx, the sort of discount retailer, are looking at, I think, 3% same-store sales growth is what we were talking about. A lot of people were talking about. And then stores like Macy's are supposed to have negative 3% same-store sales growth. Well, Nordstrom has Nordstrom and they have Nordstrom Rack, so they're actually dipping in both of these areas. So same-store sales growth, you should get negative 3 from big Nordstrom. You should get positive 3 from Nordstrom Rack. They should basically be sideways, right? Nordstrom already down 7% today, throwing a wrench into our analysis. All right, so let's start this analysis with the Nordstroms. So price consensus and EPS surprise chart first. And you'll see here what you pretty much suspect, right? So black line corresponds to the right y-axis, which is the price. The green arrows are earnings beats. The red arrows are earnings misses. And the multicolored lines represent the evolution of our Zacks consensus estimates over time. And you will note carnage as of late. Carnage since first quarter of 2015 as these EPS numbers have continued to drop. Now here's a good sign though. A bounce. And there was some faith. Because not only did the stock price bounce, but you also had a bounce, a rebound in these consensus numbers. Everybody was happy. But what the heck is this? So starting off 2017, they're basically saying, oh yeah, we lied. All those numbers that we said were going up are actually going down. Sorry. You see that? That is very upsetting to me. Because this makes me feel like this was a lie, right? Maybe they overestimated to the downside, overshot the downside. But this nasty drop here, I don't like that at all. Because now that's made the 2017 numbers what the 2016 numbers were. Which puts the stock sort of where it's at. Okay? So that's what we're seeing from the consensus. Is this trough happening, right? Is it going to turn the corner? Or what is this recent spat of negative earnings estimates really what's going to happen? Now, the good news, 3 earnings beats in a row for Nordstrom. So that's good. That's great if you're Nordstrom, okay? So this is a perfect stock to trade options on around earnings because there is a lot of uncertainty and a lot of people wondering what's going to happen next. Let's take a look at the detailed estimates page. Zacks rank number 3 hold right now. Value style score of A. That's right, an A. Growth of A. Momentum style score of B for an overall VGM composite score of A. They're going to report after the bell today, so we don't have a lot of time. We got to make our decision soon. It's trading 17 times earnings. That's why you've got the value. But what good is 17 times earnings if you see some of the rest of these numbers? They're in the bottom 11% of our Zacks industry rank because the whole retail not doing so hot. What are we looking at on revs? 3.41% revenue growth for the current quarter goes down to 2.9% growth next quarter. Current year number looks like 3.02. Next year, 2.3. So they're fighting their way through. As far as EPS is concerned, 3.15% for the current quarter, but next quarter, you've got shrinkage. Current year also negative 0.764%. So this EPS number is going to get worse. Next year, it's going to get better, right? It's always going to be better next year. Has that compelled analysts to make a move? This is interesting. Over the last week, you do have an analyst that has come out and increased their earnings estimate for the current quarter. Get back to my... All right. One has dropped it for next quarter. Over the last 60 days, one has increased, so that's fine. And then likely that same person that increased for the current quarter increased their current year numbers. What's the overall effect been on our Zacks consensus estimate? Well, current quarter has trended from 30 to 26 to 27. Next quarter numbers gone from 73 down to 64. Current year from 308 to 290. Next year number from 310 down to 295. So not a drastic change really in the consensus numbers. And the surprises, these 3 surprises have been nice. 24 cents, 32 cents, 12 cents. So there we go. So that's the story there. We're going to do some bar chart. We're going to look at some technicals here. I cannot stress to you enough how frustrated I am with this Macy's report because this just made this a whole lot harder. Big dip down here, obviously. Breaking and gapping down. Breaking the 50-day moving average, gapping down. That looks ugly. Money flows have still been positive, though, here. For the most part, for a pretty long time. And the stock's ticked up a little bit. And now we've got basically just a retrace to the 50-day moving average. This trend line is broken. So this doesn't even matter, right? So that's gone. Look at the volume here, though. Big chunk of volume. Big chunk of volume. Kind of right. That's down there. That's 44s, 45s. That's where they're waiting. But still, a lot of volume in this area. There's been a lot of shares traded here. But big down day today. How ugly is it today? Let's look intraday today. Let's just see what it's doing. Yeah, they're just slapping her down. Just slapping her down today. Lots of people dumping ahead of earnings tomorrow. Okay? They just want out. That's it. We're getting out. We're not going to wait till tomorrow. We're out. Let's take a look at my top secret G14 classified stuff I got going on here. Consolidated surprise. You know this is my favorite. Let's see what Nordstrom has done. Recent reports. The last report, nothing. October moved, July moved, April moved, lots of movement. So they were all over the place. Now, see, this is the thing that we have to remember. There's already a -7 here now before they even reported, right? So we didn't even get anything, and it's already on the move. And then before then, a little bit of nothing. But I think this is going to have an effect instantly already, guys, without even looking at the options chain. I'm going to tell you we need to be sellers of premium here, because it's probably threw off. There's probably everything's out of whack right now. I can tell you that for sure without even looking at the options chain. So we need to be sellers of this premium. Let's take a look at what's going to happen. And we got to keep this 7% in our mind too. Let's pull it up. As always, bar chart, my friends. JWN over here on the left side. You've got options quotes. Pull that up. It'll give you the options chain. They're going to report after the bell tonight, but they don't have weeklies, so we're going to go out to the monthly expiration here. Instead of the stacked view, let's go side by side. Nordstrom's at 46.30 right now. I suppose we'll use the 45s as the basis of our analysis here. 298, 315. So we're going to call this 309. Add that to the at the money puts going 131 by 140. We'll call that 135. That's 444 divided by the 45. They're looking at 9.8%. Not going to happen. Not going to happen, my friends. I don't think so. Okay? So 440s is what they're talking about. So 440 away from where we already are. Where we already are. So that's 51 to the upside. Really? 51 to the upside. And 42 to the downside. Is that what we're looking at? So luckily there's a 42.50. So we can use that. We can use that. Or we can go here and go here. Okay? We're going to stay and play. Everything that we do is going to be within this options chain here. Okay, let's go ahead and move this from the side-by-side view to the stacked view. I agree, 9.8, way too big for this. Way too big, Bullinator. It's got to be less than that. It's got to be less than that. Norm, I think you're right. Okay, so I like how Norm is. I like where your head's at, Norm. So first, let's look at a credit spread on the call side. Okay, so this would be a bearish credit spread, and back to the chart real quick. It was right at 50 before, right? So what kind of report does this have to get back to where it was, right? So that's kind of what you're looking at when you're putting this one together. Which is funny because if this was a day earlier, right? If we did this yesterday, we'd be looking here. We'd be looking out 5250s, right? Let's just price that just for giggles. Just eyeball it really quick. You see 5250 at 33 cents, this at 12 cents, so that means it's going to be 21 cents on 250, right? So 21 on 250. Let's look at this. If I remember how to type in on a calculator. So 229. So 21 divided by 229. So that's only a 9%, right? 9% going out that way. That seems way too... I'm not going to risk... No. I don't think so. I'm not sticking around for 9% on that, right? So then that makes you look at the 52.50 call spread. So you're saying like, no, it's not going to get back what it gave up today. And here's a nice little opportunity here. Jim, the wife at Nordstrom, ringing it up, huh? Is she going to Nordstrom or Nordstrom Rack? Because if she's going to Nordstrom, then man, I better get a lot of these option picks right for you. If she's going to the Rack, then it's better, but I still feel your pain. All right, so if you're gonna sell or go short the $50 call, you're gonna get 81 cents in premium. That's the midpoint between the two, so that's what I'm gonna use. Simultaneously going long the 52.50 call is going to cost you 33 cents. So your net credit on this is going to be 48 cents. That seems like a lot of move, right? It's a lot of juice there. 48 cents. Now remember, the difference in the strike price is a 250 minus that 48 cents. That means you have 202 at risk. So you can make 23.7% on this. All right. So I'm going to say the bear credit is short the 52.50 call spread for a 49, what was there, 48 cent net credit. The Rack and the Flagship, oh man, she eats lunch at the cafe? Oh. Hey, the Nordstrom cafe is not bad though, it's good. It's good, though. It's delicious. I think I've been there a couple times. Man, Jim. Holy smokes. Yeah, I feel you, brother. It's got both of them. Okay, so 50, 52.50. So that's the bear credit. Now, what's the bull credit going to be? Let's just apply the same kind of logic here, right? Now, the bull credit would basically say, well, you give up $4 more to the downside. That puts us 42.50. So then be selling something like that, right? That's sort of the initial bull credit. If you're going to do a bull credit spread on this, remember the stock's already down 7% today. I think you can be a little bit more aggressive on a bullish credit spread here. I think you could do the 45, 42.50 because of all the downside that's already been baked in here, right? So if you're going to do a bull credit spread, be a little bit more adventurous. So if you sell the 45, you're going to get 136. Simultaneously buying the 42.50 put is going to cost you 62 cents. So now in this case, 74 cents is going to be your net credit on this short put spread. Pretty much, I mean, just a little bit out of the money. Now the difference in the strike prices is still 250 minus that 74 net credit that you got is 176. So 74 divided by 176 means that this trade is good for 42% on the bullish credit spread. So bull credit is short the 45, 42.50 put spread for a 74-cent net credit, okay? I think if you're going to do the credit spread, you can be a little bit more bullish on this because of that move, right? You could be more aggressive, rather, because of that move that we saw already in the stock, which is like, lights out, okay? What about if you want to go long on this? Okay, so right off the bat, a bearish long or a bearish debit spread is, you're talking about putting on a bear. Don't do it. How about that? How about we just say that? No bear debit. I can't even draw. I can't even do it. Don't do it. Just don't do a bearish debit. Just don't. No. Don't do it. Please don't do it. Okay? Because your risk versus reward is way off, guys. Way off. Way off. Way off. Okay. So, Kurt, I like where your head's at. If we've already seen the move, would an iron condor make sense? And I'm going to say, yeah. Okay, iron condor is going to make a little bit of sense here. So rather than give you guys this bearish debit spread, which I just don't do it. Just don't do it. And if the bearish debit spread would have won a lot of money, would have gone up a lot, then I don't care. Then you guys can call me stupid. I don't care. You guys already do, so it doesn't matter. So on the condor side, if I'm going to do the condor, the short call spread that we put on, I think is the way to go with the bear short. So still do the 50 and the 52.50. And then on this side, do what I originally had said, which is the 42 and the 40. So this, again, guys, is if for the second leg of a condor that you would do to do this side. So going short the 42.50 is going to be 62 cents. And then simultaneously going long the 40, that's 27 cents. So that's 35 cents. Okay. So now you've got 35 cents coming from this side plus the 48 cents on the other side. So that's 83 cents is your total net credit. Now the amount of money you'd be able to lose on that condor is 167, right? So 83 on 167, you can make 50% on that condor. All right. So the condor is 50, 52.50 calls and 42.50, 40 puts for, what is that, 83 cent net credit. More aggressive condor. I don't know. Do we want to be more aggressive on the condor? The more aggressive condor would be the 45, 42.50 for the put side. And we already know the math there. That would be 74 on that end. So you'd get 74 plus 48. And that would be on 128. So you could almost double up on that condor. So more aggressive condor is 50, 52.50 calls and 45, 42.50 puts for 122 net credit. How do you like that? Very aggressive, right? I don't think you have to be that aggressive. You don't have to be that aggressive here. You can give it a little. Part of the good news about the condor is you want to give it a little bit of space and let it do whatever it's going to do and not get trapped in this thing, okay? I'm going to agree with Norm here, and I'm going to say that the downside for the most part is in. Can you imagine? Because look, again, Macy's gave up 14%, okay? Nordstrom already down half of that. Let's look real quickly. We saw our price consensus and EPS surprise chart on Nordstrom. So we already know what this looks like, right? So maybe she turns around, maybe not. Now let's look at what Macy's look like heading into this. We'll let this load up. Macy's already faltered, right? Already went, I don't know, right? Already kind of gave up, had their thing. and then another disappointment. But Macy's is disappointed here too. So Macy's has been a disappointment, which is fun to say being a Chicago guy because I want Marshall Fields back. Not really. I mean, I could care less. But Macy's disappointing here. So the Macy's chart here looked worse than the Nordstrom chart. It certainly did. And now they've already, boom, dropped this thing down to 46s. They're already beating this thing up. So I'm officially going to say my pick for Aaron Finch to do the reverse of, he wants to George Costanza me, is the bull credit short, again, May 19th, 45, 42, 50 put spread for 74-cent net credit. Okay, that's my official pick. I think that makes the most sense. Below the 50-day moving average here, what's going to happen? You know, who cares, right? Is this really going to give up more? I don't think it gives up more. And if it does, then we deserve to lose that money because, frankly, I think that's the smart way to go. And if the smart way doesn't work, I don't care, right? If the market decides to go really stupid and do something weird and keep going down here after it got beat up 7%. Talk about a black eye for a fight it wasn't in. Lottos. I mean, or not even lotto. I'm just going to say, if you just want to be aggressive here, I mean, you got to go out. Here's an aggressive call spread on this. I think the aggressive call spread, aggressive long call, is 42.50 out to 52.50. That's where you got to go. So going long the 47.50 is going to cost you 171. Simultaneously shorting the 52.50, you're going to get back 33 cents of that. So 138 is your net outlay here. The amount of money you can make is the difference in the strike prices, which is $5 minus that 138. That's 362. So you can make 362 on 138. This is more than a triple up play here. Okay, so do I want to even call this the lotto? I'm not even going to call this the lotto. I'm going to say this is an aggressive long or aggressive debit, aggressive bull debit. Is long 47.50, 52.50 call spread for 138 net debit. Boom. There you go. And the actual lotto ticket is the 52.50s. There's your lotto. Because, I mean, that's like everything turns around and then all of a sudden the stock is skyrocketing, right? Absolutely, Jim, it's too aggressive. So we've got stock that's already, let's pretend this was at $50. Okay? And a good report should have taken this thing to 54. Because we're already seeing a bad report get priced in before it even had it. And that took it down to 46s. So 54. There is a gap here. And right around there. So I think there you go. There it is. So officially, guys, I'm going to say the way to play this is selling that put spread. I think that's the way to do it. Okay? Yes, it is retail. It is retail, my friends. But this is just too much. This is too much. This is too much when they haven't done anything. So even if they did report and it was terrible, right? The stock goes to 45 maybe. We already said the support. I mean, here you have sort of swing support down at 40. If this thing gets beat up again and they totally just torch this thing, I don't know, guys. Do you want me? Do you guys really want me to put together a debit, a bear debit? I should just do the bear debit anyway. I mean, it takes some. It's gonna take some real cojones to do a bear debit here. Because what are you gonna do? 45, 42.50? You're just gonna do the opposite of the one that I was short? I don't know, guys. I don't know. I've been wrong, right? I haven't been so good here. It hasn't been too hot. I'll admit that. But even like Priceline, and look at now it's down below our level. You son of a. All right. That's it. Buy into the fear. AJ likes to buy into the fear. I like it, guys. I have been on a terrible losing streak. I understand. So if you want to fade the beard, go ahead. Do what you got to do. But my official call is short, out of the money, put spread. All right, guys, thank you so much for hanging out with me here today on Zach's Live Trader. Later on, we've got the good, the bad, and the ugly trade review. So we're going to go ahead and do that. And that's right, I didn't even put a fib on this. I should have done that. Oh, man, so you got me distracted. Boom, there's the fib. Hits the 50 and then wants to go higher. Anyway, so there you go, guys. That's my story, and I'm sticking to it. I'm going to go ahead and shoot you over the good, the bad, and the ugly review when it's done later on today. And I will see all you premium folks tomorrow for Home Depot. Have a fantastic day, everybody. See you soon.